What's up, guys? Welcome back to the Investing for Beginners community. I'm your host, Johnny, and I got another exciting video for you today. Guys, I made over 10% profit in just a little over 10 days on the Nvidia. Look, I'm gonna show you profit, guys, because I'm all about showing you and putting my money where my mouth is, guys. I ain't gonna be talking about it if I'm not investing in it. So look at this, guys. I'm up, screenshot, it was up $617. Average cost here, $554. Now, guys, don't laugh. It is a small amount because it is a small account just for you guys, okay, to learn and grow. Now, this is a public traded account that I show you guys. So we have $27 in here. Cool part about this, we only put $25. That's correct. Okay. All right. $25 we put in. All right. Now let me show you. Let me show you the results. Let me show you the real. All right. This is a real here. Robinhood. This is what I'm using. These are the trades I made on January 9th. We put $5 in, guys. So we could have got on this company for $5. Okay. Now we're going to go over some more stuff. We're going to go over how I was able to get this 10% trade. We're going to go over some fundamentals of this company, how you can basically just hold it long term if you want, and how we're going to make some money as it goes up and down, maybe while you're also holding it long term. Also, we're going to talk about 3 different investment accounts that you should have, that everyone should have. So stick around to the end so you can find out what those 3 accounts are. Now, guys, moving forward, this is episode 419. All right, we've been making a lot of videos. We're getting there. Okay, I want to show you guys some proof now. This is a public account. I figured we'd do this now in January. So January 9th, we started making some plays, making some moves. $5 at $537. Everyone was saying it's overbought. It's overbought. It's going to come down. Well, it didn't. Like a week later, on the 16th, it went up $558. I bought $20 more worth, okay? You guys can do the exact same thing. You don't need a lot of money to invest. Now look, sold it 3 hours ago of the time of this video. 3 hours ago. All right. This is January 26th. So 10 days. And again, you guys are like, well, it's up $612. I could have bought more. But why didn't I? We're going to talk about it. Now, I sold it for $27.59. We locked that money in. That is now our money to keep, and we can take it and trade with something else. Now, why did I do that? Why did I do that, guys? Well, oh, and you guys don't believe me? 10%? Here we go, 10%. $25 invested, $27.59. That's 10.36% locked in. All right? Some people out there don't even make 10% a year in their accounts. Some people are negative 50, 80, 100%. And I don't want that for you guys. Okay? I love you guys. I want you guys to grow. And I want you guys to make some money. Okay? Nvidia's up 200% in a year. 200% in a year, guys. And check it out. They're at 613 now. They dropped, okay? They dropped. They were at 626 on January 24th. They were at 625 on January 25th. So I could have made even more money if I was paying attention. Now, how come we didn't lock in profits here? Well, one, I wasn't paying attention. And you can only do a trailing stop limit order when you own a full share of a company. And I wasn't willing to invest $600 when our account is on this public account. It's like $1,100 now. Okay, I wasn't going to spend that much equity on it. So put a little bit of money in just to showcase what we do. Never invest all your money into one stock. You got to diversify. You got to put your eggs into different baskets. Okay. Yeah, it would have been a smart move. Put $1,000 at 500 and then be up 10%. Would have made $100 on that play. But that's the entire account. I'm not saying I didn't do it on my private accounts, but what I'm saying here on this public account, and that's not something you're going to want to do as a beginner, okay? Now, this is 10% profit in about maybe 10 days, okay, if you don't count the $5 right there. Now, you could have held this company long term. You could have also bought this company a year ago, okay, and tripled your money. You could have got in for $197 and you could have been selling it right now at the $600 mark, okay? Now, this right now is the time to lock in those profits, or you decide, I like this company, it's going to go up even more, and we're going to talk about it, and it's going to be long-term play for you. You might be loading up on this, buying share after share after share, okay? And it's going up and going up. That's okay if you're holding it long-term. Now, if you just want to make some plays, let's make some plays on it. All right, and let's go over some information. Now, why is NVIDIA so great? NVIDIA is so great because I feel like I just spent a lot of time on a different screen. So hopefully it wasn't on a different screen. Here we go. We're playing this one for you guys right here, the plus button. Show screen. Okay, so NVIDIA engages in the design and manufacturing of computer graphic design, basically computer processing chips, right? They have 26,000 employees and they've been around for almost 30 years, a little over 30 years. Now, what's great about this company is they're at $1 trillion club. They hit the $1 trillion club, my guys. They hit it, all right? Their PE ratio's at 81.36%. Now, let's talk about it. Let's talk about this real quick. 81% or 81 PE ratio, okay? We like anything when we talk about this channel, 5, 10, 15, 20, okay? We never invest in a negative PE ratio. That's not something I do unless it's a way that you can make some quick money, okay? And we're going to talk about that in a minute, how to reduce your risk on those quick money plays. Now, with that said, 81, that's good. That means this is a good company, okay? They got some money. They have a good little dividend yield. It's not much, but they're paying something, right? 52-week low, $189. Look at that 52-week high, $628. Now, why wouldn't I hold it long term? Or why is it a good idea for you to hold it long term if you decide to? Now, I can't give you any financial advice. This is not financial advice in any way, but what I can say is what I'm doing and what my play and ideas are moving forward. Now, what does that mean? Well, this company does have a 92% buy rating from 53 analysts. Okay, no one's saying to sell it, and a couple are saying to hold. Now, NVIDIA not only works with the computer and gaming and processing and stuff like that, but they're also going to be putting this technology into self-driving cars, into AI in the future. And they also are going to be getting into more crypto mining, okay? So this company is just blowing and going up. They have a ton of money, not a lot of debt, and right now their earnings per share, $4, guys, $4 for their earnings per share. So this is one of those companies that you can hold it long term, but you can also, and very carefully, you can get stuck with the bag. So this brings me on to the next point, okay? All right, and that's going to be making sure you know where your stop loss is or your trailing stop loss is. Now, this is important, okay? Look at these dips, guys. This one was January 3rd. They were at 475. This one in October 2023, 405. September 20th, 2023, 410. And August 11th, 2023, 408. So there's nothing saying that this company couldn't potentially go back down to $400. Now, I'm not saying it will, but it could. It can go down to $500. Okay, so that's why I went ahead and I locked in my profits at the peak. See how it peaked out right here? This is the peak right here. Look at that. And as you can see on the end, it's starting to come down just a little bit right here. It's coming down. I don't want to get stuck holding the bag. And so what I did was I sold and locked my profits in. Now, some of you may believe in the long-term play. That's fine. That's fine with you guys. But definitely make some money on the way up too. Lock some profits in just in case, right? Because it comes back down to 475. It'll be a lot easier too to load up there and ride the wave back up. Nobody says you have to hold these companies long-term. All right? That's the point. And with that said, okay, you're going to need a stop loss and a trailing stop loss. Now, a trailing stop loss, I could show you guys here. A trailing stop loss is going to be very important because it's going to help you from losing money, from holding that bag. You don't want to be holding the bag. All right. Let me get a good picture example here if I can get one. They have a really good one on Robinhood, but okay, here, we're going to use this one for example. Blow this up. Oh, how do you blow this up? Can't blow it up. That's all right. We're going to go with it. We're going to go with it. Hold on. Give me a second. All right. All right, here we go. So, trailing stop loss is basically this, okay? So you're going to be getting in at say 8,000, okay? Just an example real quick. I don't want this video to get too long. But say you get in at 8,000 and you're going to have a trailing stop loss set 500 points below. Just think of this as cents, okay? You got $8. You got a trailing stop loss set at $7.50. Now that you're going up, it goes up to $9. Your trailing stop is going to follow it up to 8,500 now, okay? Now, it may dip, and if it dips, as you notice, it doesn't go down, it stays at that 85 or that $85 mark, right? Okay? Now, it didn't hit, so it's not going to sell, okay? It's just going to ride it up again. Now you're up to 95, or say the $9.50. Your trailing stop goes to $9. Now you had a trailing stop at $7.50. This is the most you're willing to lose. If you got in at 8 and it went straight down to 75, then you would sell, you would get stop lossed and you would lose a very small amount. Now look at this. You started at 8 and you actually got stopped out at 9,000. Okay? Why did that happen? Well, it went up to 9,500. You could have sold up here if you wanted to. You could have just went and canceled this order or edited it, and you could have sold at the peak if you were paying attention, but maybe you weren't paying attention. Maybe it's been a day, maybe it's been a week since you put this order in. You're out doing something, you're whatever, right? You're not paying attention. It goes down. Now this goes down all the way back to your entry price at 8. You don't make any money. You just went like this. That's it. You put $8 in, it went all the way up, and it went back down to $8. It might even go past that $8 mark, and then that's when you are holding the bag and you're losing 20, 30, 40% of your portfolio, guys. All right, and we can get into more of that later in just a minute. We're gonna go over that about how to make sure you minimize your risk by not spending all your money on one trade, okay? So, you know, you got stopped out at 9, but you got in at 8. So you made $1 per share because you had this trailing stop, okay? You could have made a little more. You could have made a lot less, but you rode this up and locked in some profit. That's the point. We want to make money, okay? We want to make money. That's the point here, guys. All right? So I'm going to show you how that makes a difference, okay? So with that said, that's a trailing stop loss. All right? That's how you're going to protect yourself. Now, the final way you're going to protect yourself, guys, now this is a final step. You need at least 3 investing accounts. 3 investing accounts, guys. I have 3. I'm sure a lot of other people have 3, 5, maybe even more than that, okay? But this is the main point here. You got to have 3 investing accounts. You need to have 1 long-term. A long-term account, someone that's extremely well secured, Charles Schwab, TD Ameritrade, Fidelity. Heck, if you got to use Robinhood or one of these platforms, you can. I have seen people's portfolios up in the millions of dollars on Robinhood, so it seems quite safe. But if you're not sure, you want to hold it, I'm thinking 30, 40 years for retirement, okay? This is your retirement account. You're putting money into it long term. You maybe have NVIDIA in there. Maybe you have Google, Apple, Tesla, whatever companies you believe are going to go up. That's where you're going to put the majority of your money, okay? You're going to probably put, I'd say, like 60% of your money into that one account, okay? So you're going to need 1. Then 2, you're going to have a swing trading account. Now, it could be like Robinhood, Any of those other platforms I just mentioned, you can swing trade on there too. Webull, Moomoo, stuff like that. Okay, now you're gonna have a swing trading account. These are gonna be overnight plays, week trade plays, maybe month-long plays, but mostly between like a couple days to a couple weeks. Okay, this is gonna be 20% of your account, and you're gonna put them in companies. Actually, it's not 20%, my bad. It's going to be somewhat long-term, but these are still swing trades, your Magnificent Seven stocks, right? Nvidia, Tesla, Amazon, stuff like that I just mentioned. Now, those are the companies that you can have 20% of your money in, and they're also going to be long-term plays, right? Not so long-term that you can't buy and sell out of them, though, but long enough to where you can ride those month-long waves. Buy low, average down, ride the wave up, sell high, lock in some profits, stuff like that. Now, that's a second account. The third and final account, not even final, but the third account I recommend, you could do as many accounts as you want, is a day trading account. Okay, this is going to be the one that you're going to want quick speed. Okay, we're talking like Moomoo, and we're talking Webull, stuff like that. Now, you can still day trade on Robinhood, and if you're using that, that's great. I still use Robinhood all the time. I use Moomoo and Webull to do some additional day trading, which is awesome because the more platforms you have, the more day trading you can do. Okay, if you don't have $25,000 in your account, you can only do 3 day trades a week. All right, but if you have 3 accounts, you could do 9 day trades a week, right? So think about that. You can do more day trades. Now, with that said, that day trade account is going to be important. That's where you're going to put maybe about 10% of your money, right? Okay, 10%. Now, we just talked about 60% in long term, 20% in your big swing trade accounts with your companies that you believe in and you trust in, that Magnificent Seven. Okay, that's 80% right there. So now then 10% is going to go into some day trading plays, right? And we're going to break it up into, basically, I mean, those are going to be your more short term day trade, swing trade kind of plays like that. Okay, now those can be like, say, the Nvidia run that I just did. You put 20%, so you have $1,000. Hopefully that's not too much for some beginners. Say 100 even. You're gonna put 20% into those plays. So whether it's $20 at 100 or $200 with $1,000 account, that's the most you're gonna do on a trade. As you noticed, I did $25. That was the most I was willing to invest on this trade here. Okay, I could show you case that, right, Chris? That was the most I was willing to trade, was $25. Why? Because it was roughly about 20% of this public account at the time. Okay, guys, is this all starting to make sense, starting to add up for you? All right, good. That's a good thing. All right, so now, then you're going to take 5%, all right, because we still got 10% to play with. We're going to do 5% in options trading. And if you guys want to learn more about options trading, you can let me know in the comments below, and I could start doing more videos on those, right? We're talking 5%. You're not going to blow up your account and put 100% in AMC, and then that's it. You blew your whole $100 or $1,000. What you're going to do is you're going to use 5%. So if you have $100, my guys, you only got $5. You'd only buy $5 contracts. And I tell you what, there ain't nothing like finding an amazing setup and not having enough money to play it, or not wanting to put in more equity to play it, right? Don't go more than 5%. 5%. So that means what? You got to put more money in, guys. Okay, so if you have $1,000 account, 5% is a little better, okay? You could buy $50 contracts now. And $50 contracts are a lot more common, a lot more average. I mean, I can get set up with a $14 play right now, $14 to buy the contract max loss and make a $30 to $36 profit. Okay, that's options trading, and I could show you more, and I'll get you some screenshots of some actual proof of that as well. Okay, guys, but this is just some basics, some investing for beginners, fundamentals for all you guys out there just joining the channel. Okay. Finally, that last 5% is going to be cash. Okay. As you can see, let me bring you back here. As you can see, I got $68. That's 5%. That's roughly 5%, maybe right on the money there. Okay. Of my account, because we are now pulling up, think about $1,100. Heck, why don't we just show you? Why don't we just show you right now? It's a public account. public account here. All right, $1,186. So our cash is actually, I believe, roughly right around that number, like 5% cash, 6% cash. Okay, $73 brokerage cash. Now, I'm not showing you guys this to brag. I'm showing you guys this to get fired up and to educate yourself. Okay, we started this account in January 1st, to show the public. We put our first $100 into the account so that way we can fund a reoccurring investment with SCHD. And we've been doing reoccurring investments for quite some time now. And if you want to see a full video on reoccurring investments by just using simply $5 every day, and how you can make and build your account up to $1,200 in a year by $5, get the benefits of dividends, and also increase your share amount and potentially lower your average share price. Okay? All this I show you in my $5 a day or $5 challenge. And you guys can sign up and do it all for free with Robinhood. And you even get your first $5. So guys, again, I'm showing you this so that you can be inspired, fired up, and excited about starting your investing journey. Okay? We're on this road to build this account publicly to, I'd say, 10 to 12K by the end of the year. Trying to push it to probably 15 or 20. And with some options trading, we might even be able to get it to 30 or 40 grand. Guys, and within 1 year, thinking about it, with $5. You could do the same thing. Follow me along this journey. Sign up and do the same thing in the link below. And smash that like button and hit the subscribe so you don't miss out on all these future videos. I got videos coming out every single day for you guys because I love you and I appreciate your support. See you in the next one. Go watch something else. This one or that one. This one's pretty good right here.